Here's something that should stop you cold. A company that has never turned a profit, that sells machines most people on Earth will never touch, just told Wall Street it wants to go public, and investors are circling it like it's the next Nvidia. The company is Quantinuum, and it's the quantum computing arm Honeywell has quietly been building for years. On the 4th of June 2026, the news broke that Honeywell is taking Quantinuum to the public markets. Now, if the words quantum computing make your eyes glaze over, stay with me, because this story is less about physics and more about money, a lot of it. Quantinuum was last valued at around $10 billion. Let that sink in. $10 billion for a company whose core product is a machine that manipulates individual atoms suspended in a vacuum. To picture it, imagine a normal computer chip is a city of light switches flicking on and off. A quantum machine is more like a magician spinning 100 coins in the air at once, each one heads and tails at the same time, until the moment you look. That's the bet Honeywell is asking investors to make. But an IPO isn't a science fair, it's a sales pitch with numbers attached. So before anyone throws their savings at the hottest 3 letters in tech, let's pull this thing apart. Because the headline and the fine print tell very different stories. So how does a thermostat company end up owning one of the most advanced quantum computers on the planet? Because that's the part that surprises everyone. Honeywell, yes, the same Honeywell on your office air conditioning and in the cockpit of nearly every airliner, has been working on quantum computing for over a decade, mostly behind closed doors. Back in 2021, Honeywell took its in-house quantum division and merged it with a British software firm called Cambridge Quantum. The combined company became Quantinuum. Honeywell kept the majority stake, around 54%, and the rest was held by Cambridge Quantum's backers and later investors. Think of it like a car company that spent years building the best engine in the world, then teamed up with the best software designer and spun the pair into a brand new vehicle. The engine is Honeywell's trapped ion hardware. The software brain is Cambridge Quantum's code. Since then, Quantinuum has raised money at rising valuations, a $300 million round here, a $600 million round there, climbing from roughly $5 billion to around $10 billion in just a couple of years. Each round pulled in heavyweight names, including chip giant Nvidia, which took a stake of its own. So by 2026, Quantinuum wasn't a science experiment anymore. It was a heavily funded company with a clear next step on the horizon. And that next step, going public, is exactly where the tension begins. Now let's open the hood, because this is where Quantinuum is genuinely different from its rivals. Most quantum companies you've heard of, Google, IBM, Rigetti, build their machines from tiny superconducting circuits, chilled to near absolute zero, colder than deep space. Quantinuum took a different road. It uses something called a trapped ion computer. Here's the plain English version. Instead of etching switches onto a chip, Quantinuum takes individual charged atoms, ions of an element called ytterbium, and suspends them in midair using electromagnetic fields inside a vacuum chamber. Then it pokes them with precision lasers to do the calculating. Picture a row of marbles floating perfectly still in empty space, and a laser tapping each one to flip it. The big advantage is quality. These trapped ion qubits, the quantum version of a bit, are among the most accurate in the world, with error rates far lower than most superconducting rivals. Quantinuum has reported quantum volume figures, a benchmark of overall power, doubling year after year, hitting numbers no competitor had matched. Fewer errors means you need fewer backup qubits to fix mistakes, which matters enormously down the line. The trade-off? Trapped ion machines tend to run slower and are harder to scale up to thousands of qubits. So Quantinuum is betting that precision beats raw size, that a smaller, cleaner machine will win the race. Whether that bet pays off is the multi-billion-dollar question hanging over this entire IPO. So what does a $10 billion quantum machine actually do all day? Because if you can't answer that, you shouldn't be buying the stock. Let's get concrete. Quantinuum's customers aren't gamers or office workers. They are banks, drug makers, and materials labs. Take pharmaceuticals. Designing a new drug means simulating how molecules behave, and molecules follow quantum rules. A regular supercomputer simulating a complex molecule is like trying to predict the weather using only a pocket calculator. It chokes. A quantum computer speaks the molecule's native language. Quantinuum has worked with companies exploring exactly this. Then there's cybersecurity. Quantinuum sells a product that generates truly random numbers using quantum physics, and genuine randomness is the holy grail of unbreakable encryption. Banks like JPMorgan have publicly run quantum experiments with Quantinuum. There's also the materials side, designing better batteries, better catalysts, better superconductors by modeling atoms directly. Here's a number to anchor it. Some analysts project the quantum computing market could grow into the tens of billions of dollars per year within a decade. Quantinuum wants to own a fat slice of that. But notice the careful wording I keep using: exploring, experimenting, working with. Because today, almost none of this is making serious money yet. These are pilots and proofs of concept, not gushing revenue streams. And that gap between the dazzling demos and the actual bank balance is exactly what most cheerleading coverage skips right over. Let's line Quantinuum up against the competition, because no company exists in a vacuum, even one that literally computes inside a vacuum chamber. On one side, you've got the giants. IBM has a public quantum roadmap and machines with over 1,000 superconducting qubits. Google made headlines with a chip it claims solved a problem in minutes that would take a normal supercomputer longer than the age of the universe. These two have near-bottomless budgets. On the other side are the pure-play startups already trading on the stock market, IonQ and Rijti. IonQ is the closest comparison because it also uses trapped ion technology, just like Quantinuum. And here's the eye-opener. IonQ went public a few years ago, and despite earning only a tiny amount of revenue, has at times been valued in the billions, its stock swinging wildly on hype and headlines. That's the template investors are pricing Quantinuum against. Now, the bull case says Quantinuum is the strongest of the bunch, better hardware quality than IonQ, plus a real software business, plus Honeywell's deep pockets and Nvidia as a backer. The bear case is brutal but simple. All of these companies, Quantinuum included, are selling a future that's still years, maybe a decade, away from paying for itself. You're not buying today's profits. You're buying a lottery ticket on tomorrow's. And the difference between those two mindsets is the difference between an investor and a gambler. So which one are you? Here's the part the breathless headlines tend to bury: the actual financial reality. When a company goes public, it has to open its books, and that's where the romance meets the spreadsheet. Quantinuum, like every quantum firm right now, is burning cash. Building lasers, vacuum chambers, and research labs is staggeringly expensive, and the revenue coming in is a trickle compared to the spending going out. Analysts expect these companies to lose money for years before, if ever, they turn a profit. So what should an investor genuinely watch? 3 things. First, revenue growth, not the total, which is small, but the speed. Is it doubling each year or flatlining? Second, the customer list. Are blue-chip names like JPMorgan and Big Pharma signing real, paid contracts, or just free research pilots? Paid is everything. Third, the cash runway, how long the company can keep spending before it needs to raise more money and dilute your shares. There's also a wild card called error correction, the holy grail where quantum machines become reliable enough for real work. Whoever cracks it first could leap ahead overnight. Quantinuum's low error rates put it in a strong position, but nobody has fully solved it. And one more thing nobody's saying loudly enough: Honeywell keeps a controlling stake even after the IPO. That means everyday shareholders get a slice of the upside, but very little say in the decisions. You're a passenger, not a driver. Keep that firmly in mind. So let's turn all of this into a practical checklist you can actually use the next time a hyped-up tech IPO lands in your feed, quantum or otherwise. Step 1. Separate the science from the stock. A breakthrough machine and a good investment are not the same thing. The Concorde was a marvel of engineering and a financial disaster. Ask, does the technology have paying customers or just admirers? Step 2. Read the revenue, not the valuation. A $10 billion price tag tells you what hopeful investors will pay. It tells you nothing about what the company earns. Find the actual sales figure and the loss figure and look at how fast each is moving. Step 3. Check the lockup and the float. After an IPO, early insiders are usually barred from selling for a set period, often 90 to 180 days. When that lockup expires, a flood of shares can hit the market and push the price down. Mark that date. Step 4. Size your bet to survive being wrong. Speculative tech like quantum belongs in the small, high-risk corner of a portfolio, money you can afford to lose entirely without losing sleep. Never the rent. Step 5. Watch what the insiders do, not what they say. If Honeywell and Nvidia are holding their shares for the long haul, that's a quiet vote of confidence. If they are rushing for the exits, pay attention. Run any flashy IPO through those 5 filters, and you'll dodge most of the traps that catch excited first-timers. Because the next part is where it all comes together. So here's what this actually means for you watching at home tonight. Honeywell taking Quantinuum public is a genuinely big moment. It's one of the most advanced quantum computing companies on Earth stepping onto the open market, and it tells you the smart money believes this technology is finally getting real. That's exciting, and it's worth paying attention to. But excitement and a sound investment are 2 very different animals. Quantinuum is selling a glimpse of the future, atom-by-atom computers that could one day crack problems no normal machine can touch. The catch is that the future hasn't arrived yet, the profits don't exist yet, and the road there is measured in years, not months. If you're tempted, treat it like what it is, a high-risk lottery ticket on a world-changing technology, sized so that being wrong won't hurt you. Watch the revenue growth, watch the paid contracts, and watch that insider lockup date like a hawk. The companies that win the quantum race could become tomorrow's trillion-dollar titans. The ones that lose could quietly vanish, and right now nobody can tell you with certainty which Quantinuum will be. What I can tell you is that understanding the story before you risk a single dollar puts you miles ahead of the crowd chasing the hype. If this breakdown helped the pieces click into place, follow for daily AI news. I dig past the headlines on the biggest tech stories every single day, so you always know what's really going on. I'll see you in the next one.